Well, guys, welcome back to the channel. Today we have got a lot to talk about. JPow, he giveth and he taketh away. He did not disappoint today. He dropped some absolute nukes on the market today. So we're just going to get right into it, waste no time here. There's a lot to talk about. If we look at our price action for the day, looking at the futures, let's just look at SPY. You can see right where the market dumped, and it says, soon as Powell opened his big old mouth, right at 7, we get this opening statement that dumped the market about 1%, and we continue to bleed another full percent. We go straight down to 398 on SPY today, down 1.5% with the Nasdaq following it closely behind, down about 1.25%. So let's talk about why did the market sell off so hard right there? Well, we got a few reasons. The big one, JPow comes out with his opening statement here. I'm not going to read the whole thing out. You can go and Google it. Very easy. Just Google it. You can find it for yourself if you want to read the whole thing. I'm going to go over what I thought the market probably most likely reacted to the hardest. So he does his typical thing, inflation's still high. We still want to keep jacking up rates. We still see too much tightness in the labor market, yada, yada, yada. But he left in some key, very important signs for what they are probably looking to do this next FOMC meeting in terms of how big of a rate hike they're going to go. Are they going to stay at 25 or are they going to go up to 50? So he talks about the data from January. And now this is what I've been talking about a lot on this here channel. I've been saying, hey, if the FOMC could see into the future and they saw the January inflation number so high, would they have done a 50 basis point hike? Well, now JPow kind of gives us an idea. So the data from January on employment, consumer spending, manufacturing, production, inflation have partly reversed from the softening trends that we had seen in the data just a month ago. So he's saying December was low. January, we saw a reversal on that trend. Huge that he's even saying that that's a reversal. Some of this reversal likely reflects the unseasonably warm weather in January in much of the country. True. Still, the breadth of the reversal, along with revisions to the previous quarter, suggests that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. So he's talking about those revisions to the December CPI. They did make revisions to that, and they revised it much higher than it actually was. And he's also admitting things are higher. There's more pressure on inflation than they previously thought at just the last FOMC meeting. This is just an absolute nuke. The market has been going up on fairy tales, It's been going up on, yes, we think inflation's bad, but hey, people are still spending, and people aren't losing their jobs, so no recession, right? Well, this is kind of reality hitting in. This is what always happens. Every time this happens. This has happened every time for the past year and 2 months now. We get a crazy rally on dreams and unicorns, then reality comes in. JPow smacks us in the face with a big, thick load of reality. So boom, right there. They're like, yep, shit's worse than we thought last meeting. Now, he goes and talks about, yep, inflation, yada, yada, yada. It's still at 5.4% last January. Supply chain bottlenecks have eased. Little sign of disinflation thus far in the category of core services. If you've been watching my channel, that's all I've been talking about is that core services that have not been moving. They've been just 0.5%, 0.6%, month over month over month, not moving at all in the core services sector, excluding housing. So to restore price stability, we will need to see lower inflation in this sector, and there will be very likely be some softening in labor market conditions. This is his very polite way of saying people are going to lose jobs. People have to lose jobs. Unemployment must go up because inflation cannot go down. Service side inflation, it's just reality. It's just factual reality in macroeconomics. Service inflation cannot go down when need for labor is so high and there is so little supply in labor. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. So he's talking about those wages. Wages have not been growing as crazy as they were last year and the year before, but they are still too high. And this is what I've been talking about, the wage price spiral. I love how Powell comes out and just like says, hey, if you guys, he basically should have just told Congress to watch my channel, and I lay it all out. Um, anyways, he's talking about the wage price spiral where prices continue to go up, so workers ask for higher wages, so workers get higher wages, but then prices continue to go up because workers get higher wages. Then those workers go and ask for more raises on their wages, and it's a spiral. One feeds into the other. It's just a shit show. Inflation gets out of control. It becomes unanchored. Strong wage growth is good for workers, but only if it is not eroded by inflation. So this is the reality. You cannot just be like, hey, the consumer's staying strong. They're still getting raises. They're still getting jobs. And then on the other hand, be like, inflation's not that big of a deal, because none of that matters. Inflation just wipes it all out. So this is why the people who are like, why does it need to be 2% inflation? He got asked that a lot. A lot of these people at Congress were like, we should just settle for 4% inflation. Like, imagine being that insane, being like, what if we just kept inflation at like 4%? It's craziness. It's just crazy. It's so hard to watch this. I watched the whole thing, and these people that get elected to the Senate are just such brainless monkeys. It's just crazy. So, reality. That's the reality. Powell is giving us the reality. Once again, no more dreams and unicorns. Powell is here to fuck on your dreams. Here we go. Monetary policy. Inflation well above our long-run goal of 2%. Labor market extremely tight. FOMC has continued to tighten the stance of monetary policy, raising 4.5% last year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. So we continue to anticipate that ongoing increases. They're increasing the target range. We thought we were settled at 5%. No. He says, nah. You guys said 5%. I didn't say 5%. He said, we hope we could stop at 5%. The market has been saying, no, you're stopping at 5%, right? Reality. Once again, JPow comes out and he says, nah, you guys are dumb. In addition, they're reducing their balance sheet, which many people don't talk about the effects that that's going to have. They're literally sucking $4 trillion out of the bond market. So obviously that's why the dollar is going absolutely crazy. The dollar shot up 1.28%, a huge daily gain on the dollar. So that's very bearish for the market. The dollar has broken above that 105.3 level that we talked about, and now it looks like it is going to start shooting back towards this 110 area. Not looking good. Not good at all. So this is the big one. Although inflation has been moderating in the recent months, the process of getting inflation back down to 2% is a long way to go and is likely bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase increase the pace of rate hikes. That is a nuke. That's an absolute fucking nuke that JPow just casually drops in 6 words. In 6 words, he dragged the entire market down 1% or 1.5%. Increase the pace of rate hikes. This entire rally has been pricing in that they are slowing rate hikes, that they are going to pause rate hikes soon, that soon they are going to cut rates. He comes out and he says, fuck your calls, dude. Are you kidding me? Inflation is still here to stay. Last January's inflation was a nightmare. And this tells me that they're already pricing in that February, that this next CPI, PCE, and PPI report are going to be nightmares. That February is going to once again be very high inflation. So this is Powell just lubing up. He's spreading open the cheeks, and he's letting everyone know that, yeah, this is probably going to get worse, and we're probably going to have to go to 50 basis point hikes. So speaking of 50 basis point hikes, this right here is crazy. So now the market is pricing in a 70% chance of a 50 basis point hike. Mind you, remember my videos just last week? I was talking about how we went from 10% to 24% at the end of February. And then this first week of March, we went to 31.4. Just today, that chance jumped from 31.4% of 50 basis points to 70%. So this is just absolute cataclysmic kind of thing that is going to happen to the market. The market was completely rallying on the precedent, on the dream, that we were only seeing 25 basis point hikes from now and only maybe a few more. Now that's out the window. Now we're getting 50. At least that's what this is what the Fed funds futures are pricing in, is a 50 basis point hike. So that is, yeah, it's doomsday. It's very bad for stocks because this kind of just, I mean, it just tells you everything you need to know. I've been saying, if you guys have been watching, you know, I've been saying that the temporary pullback in inflation was 100% just based on oil prices coming down. If you look at the real heavy parts of inflation, you see that there is no slowing. Core services, zero slowing in that whatsoever. And that is more than half of the weight of these inflation reads are the core services. So that's crazy. Powell did it. He dropped the nuke. And if we look at the S&P 500 on the daily, very high volume selling, super high volume, 170 million shares. This is the highest volume on the S&P since over here, where we had 108 million shares over here, where we bounced off that 200-day moving average. So this is, I said this yesterday. I said, remember what happened back in August? Remember, we kind of top out, we pull back, we get a big 2% down day, and then the market does a little retrace it into the upside. We get a little push into the upside, you know? And then Powell comes out and he shits all of our faces. This is exactly what he did today. So I'm expecting some continuation to the downside, honestly, just purely fundamental. Technically speaking, looking at the chart, it doesn't look crazy bearish right now, but you see this high selling volume. You see the VIX just skyrocketed today. It was up about 5.5%, still below 20. So technically speaking, I don't think we're just going to go straight down, but fundamentally, this is nightmare scenario. This is absolute worst case scenario for the market, that the possibility that they would even accelerate their rate hikes at all. It's complete nightmare because the market was 100% certain that we were only getting those 25 basis point hikes from now on and only a few more. And now it's looking like we have no idea. We don't know. I mean, even last year, even towards the end of last year, we were kind of getting an idea of what the Fed was thinking of doing the next meeting. You know, we'd get a 75 basis point hike, and then they would kind of be like, yeah, we're probably going to do this next time. But now we have no clue. We don't know how many more 50 basis points, if they're ever going to do a 50 basis point. It's just so much uncertainty right now. Uncertainty, not good for the market, clearly. So, very bad. Looking at the dollar, I mean, the strength of the dollar, you can trace when the dollar skyrockets, the stock market goes straight down. I don't really need to explain why a strong dollar is not good for stocks, but yes, this is very bad. A huge 1% gainer day on the dollar. And you can see where the dollar kind of peaked out over here. What happened in January? January was a crazy green month because the dollar was just trickling down. Now it's trickling up, and the stock market has gone down with it. So not good there. You look at the 2-year bond yields, those absolutely skyrocketed today. We are at 5% on these 2-year bond yields. This is the highest we've been. I mean, we almost got to 5% over here at the beginning of November, but 2-year bond yields. Last time they were up this high, June of 2007. June of 2007, those bond yields. Before that, May of 2000. And so you might guess what happened next in both of these cases when the 2-year bond yield is this high. If we look at our inversion curve, this is just astonishing. I mean, this is just crazy. Inversion curve just going straight up. I mean, it is skyrocketing right now. It's higher than it was back in December. We're heading back for the highs we had back in September. This is also nightmare scenario when the inversion curve, when the yield curve is this inverted and continues to be inverted, just keep going straight up. All signs are pointing down. Fundamentally, everything's just pointing down right now. It's kind of crazy. Just from a fundamental standpoint, you see these bond yields. I mean, this 2-year being this high at 5% is just crazy. And every time you look at where it was high, I mean, 2018 was kind of a rough year for stocks, not that crazy. But, man, it was up here 5% back in 07. Up here, it's 6.7 back in 2000. Before that, 95. I mean, not good. All signs are just pointing it down right now. So let's look at our levels. Let's look at the Nasdaq. Let's look at the S&P real quick. So I remember talking yesterday. I was telling you guys, I think we pull back, and I would love to see if we pull back into this little box here. I drew this little box, and I said this is a box where support and resistance have both kind of flip-flopped, And now it appears that this is once again resistance. We have gone below this box. We came in here, found some support, very clear, just bear flag right here. We break that. We end up closing quite a bit down on the Nasdaq. Not as bad as the S&P, so that's kind of curious because, as we know, high interest rates are always the worst on tech stocks. So I imagine the Nasdaq is going to see some -2%, maybe -3% days from here on. Who knows what he says tomorrow if he continues to shit on the market? He could come out and completely change his mind. Who knows? But this kind of set the whole. This sets the stage for the next couple months of the stock market. That we are no longer in 25 basis point land. We are in 50 basis point land. And CPI, if that comes out red hot, that's going to be. I don't even want to think about it. We're going to see some -4%, 5% days. I guarantee it. Mark my words. I guarantee it. We are going to see that because this whole thing, this whole dream is just burning right now. This whole dream that, yep, things are actually good. The consumer's actually strong. Unemployment's not going up is falling apart. It's collapsing. And we are watching it in real time. Also very high volume to the downside right now on the NASDAQ that we had today. So right now, if we want to get bullish on the NASDAQ, we need to retake 298. We got to get back into this box and push back out of it. And you could see where the market tried to get out. I mean, this box was just money today. I was so proud of that. But we still have a bit of a gap on the downside to the NASDAQ. And really, for me, yeah, it looks bad. Fundamentally, it looks terrible. But I'm not really getting bearish until we pull back below 288, until we take out that 200-day moving average of 290, below 288. We start to close below that. That's where things get very bad, in my opinion. So I'm waiting for that until I get incredibly bearish on the market. Same with the S&P 500. We are right above that 200-day moving average. I mean, talk about this price action is just it's crazy, just whipsaw. I mean, we had 2 days of just crazy green, up so much Thursday, up so much Friday, and then just completely flips over 2 days. All those gains just gone. I mean, it's just a crazy market. So if you've been struggling, it's been a struggle. I mean, this market, things change in literally a sentence. Powell changed the entire the entire picture of the market in one sentence, in those 6 words I told you about. It's so crazy. So it's been a painful market. The uncertainty and how quickly things change, it's been painful. So if you've been struggling, I'm there with you, man. This has been an absolutely whacked out market. But right now, S&P, same thing. I drew this box and I said, hey, if we can find support around 401, obviously 4,000 on SPX, that would be huge. We did not. The S&P just went straight down today. Just an absolutely abysmal price action day, if you're a bull. Anyways, so same thing. I would love to see the S&P reclaim above 401.50, above 400 or 402, but below 393, below that 200-day moving average. We start to peak below that. We get a close below that 200-day moving average, and I'm telling you what, SPY is looking. It's looking like we're heading for 370, for 365-ish range. I can tell you that. I wouldn't be surprised if we find some support at 376 because that's the last spot the market really petered out, and then we push from there. But man, things look bad right now. Things do not look good. I mean, it was just a nuke. Powell nuked the whole thing. To the upside, I think. Yeah, we got to reclaim 401.50, man. That's it. If we don't do that, then this thing is cooked. We're absolutely cooked, and we're going to see some big downside. If we look at Microsoft, Microsoft just did what the rest of the market did, down 1%. Apple. So Apple's really looking interesting right now. Apple has been so money on these levels. It filled its gap today. So I kind of anticipated that Apple would want to fill that gap, and it did exactly that today. But if we find support at 150 on Apple, it looks very good to the upside. Below 150, and I'm thinking puts are in play on Apple because technically we got a lower high over here on this last push that we got over here. And that's kind of just what Apple's been doing, man. I mean, we got lower high, lower high, lower high, all lower lows below these. So if we consider that, Apple looks good to the downside, but today's volume selling to the downside wasn't the most convincing. So to me, the risk to reward to the downside on Apple looks really good right now. You see these, I mean, look at these daily candles. Like, these daily candles are exactly the same, man, from the 16th of February over here to the 6th of March. I mean, crazy. These mirrored, like, double top, huge wicks daily candles. Just ridiculous. So Apple, it's cooking. It looks like it wants downside. NVIDIA, baby. Let's talk about NVIDIA again. Nvidia just it can't make its mind up. The fact that it is holding up in this market, it is completely unpegged from reality, is beyond me. I cannot explain it. No one can explain it. It's kind of like people that were trying to short Tesla back years ago. It is just defying all logic right now. But Nvidia down about 1.5%. I'm still in my puts. I'm still holding on to hope. I think I'll cut them if we do re-break 240 to the upside. But Nvidia, man, just it still looks good to the downside. I know it's been painful. You got to buy time on these options. If you're getting puts on Nvidia or just short shares, if you're getting puts on Nvidia, you have to buy time because Nvidia can just do these games, man. I mean, it looked like it wanted to dump over here at the beginning of last week, and it just did not. Or Wednesday of last week, Tuesday of last week. But you can see the volume is picking up to the downside. Look at that. That's the highest downside volume that we've had since the 10th of February. So Nvidia still looks good to the downside, in my honest opinion. I cannot lie. Now, AMD was super strong today, but it did end up selling off a little bit with the rest of the market. I'm just really confused as to how semis are so strong when they are like one of the most risky tech sectors, and tech alone is going to be very risky should interest rates continue to skyrocket. But AMD, man, I'm still short on AMD, even though it looked as if it broke out of a bull flag today, but it could be bull trappy kind of stuff. So semis, I think, are going to come down considerably. But if we check out the futures, I mean, yeah, the futures volume was crazy high. I think the Nasdaq futures volume was super high. Yeah, man. Sheesh. Shit. I don't know. But I think that's all I got for you guys. Just a really big day. I mean, Powell, he doesn't disappoint. I was wrong. I honestly said in my video yesterday, I was like, I don't think he's going to come out and give us any really new information. I think he's probably going to want to see what February's inflation data looks like before he even thinks about a 50 basis point. But today he came out and he said, guess what, bitches? I'm thinking 50 basis point if that CPI data comes out hot next week. So just craziness. You cannot make this shit up. This market is absolutely whacked out. It's tweaking right now. And it's anyone's guess where it's headed next. But once again, fundamentally, all signs point down. Everything points down. Everything points that we are expecting higher inflation. We are expecting higher interest rates. We are expecting people to start losing jobs. And I'm almost getting to the point where once people do start losing jobs, I think that will be the nail in the coffin. I think that will be when we finally start to see a bottom, is when we finally start to see unemployment peaking to the upside. That will be when the consumer becomes weak. And I've talked about that before. People ain't going to stop cutting back, or they're not going to start cutting back on spending until they're actually a little bit worried about losing their jobs. And right now, no one's worried about losing their jobs outside of tech. Blue-collar people, nurses, not nurses, just name it. Most industries they need more workers. They're not trying to get rid of workers. So once that happens, that is when we start to get our black swan. That's when we start to bottom. Until then, folks, take it easy. This is not financial advice. This is only for entertainment purposes. And I would please ask you to consider, pretty please, that you drop a sub, drop a like, and drop a comment if you agree with anything I've said. If you disagree, if you want to say I'm dumb, then drop it in the comments. I appreciate all comments. I couldn't think of appreciate. But anyways, I will see you guys tomorrow. JPow's talking again tomorrow, so hold on to your asses. It might be another day to just go to the beach because today's price action was absolutely cooked. So take it easy. Be very careful. Keep caution. I'll see you guys.